Welcome to the Trading Lounge and the Day Ahead Report, and here we're actually looking at a daily chart on the VIX, which is an indicator of volatility on the COBE, and as this moves further down through here, then it makes risk on to the upside for stock. So we've been looking at this particular pattern through here, and we believe that it's got further to move to the downside, which would put stocks to the upside. So on an intraday level, this would be the Elliott wave count here. We've been talking about this triangle pattern within through here and dropping to the downside. Well, it's dropping down through here now as stock is pushing to the upside. So we expect that to continue to move to the downside. Okay, so looking at stock to the upside, this is the S&P 500 here on a 4-hour chart. We were looking at this being the A wave, the B wave, and as you know, we've been working through here for the C wave in 5 waves and looking for the low, and that's come in quite nicely, and the market's moved up quite nicely. So it's nice when things pan out in line with your analysis. So the situation now is that this move up through here is developing into 5 waves, which is nice, an impulse wave. So that means that after a correction, then we'll see further upside in the market there, with these tops being taken out through here. Of course, that the move up through here is that this would have been the first resistance area through here. The next one would be this area of supply in here. So I always look to the number of 56. So in this case, 1456 here, coming in through the high here. So this is the midpoint here as well. So this would be the next most important number here. So we'd see some type of corrective pattern through here. Because it didn't stop here and react to the 1450, then we can consider this the overshoot pattern rather than the classic pattern. And the overshoot pattern the distance it goes above is the distance it goes below. So we could see it working into the 1450 in one way or another, and then finding support and then moving up from that point there. This would also be the close to the 61.8 retracement level from this point down through here. As you can see here, between the 62%, 61.8%, and the 78.6, the square root of 61.8. But I mentioned that because there is a possible wave count that we do have this down for wave 1 here and back for wave 2 here, and then working lower from that point there. But I'm not sort of prepared to buy that at this stage. It's not our bias because of what's happening in other markets such as the US dollar, and this sits better as a corrective pattern, and also the impulse wave up here suggests new highs as well. So just drilling into that here, I haven't labelled that, but that's what we were talking about yesterday or the day before. So this is the S&P structure to the upside here. So we've got this, we were tracking this little wave 1 up through here in 5 waves for wave 1, and then we're looking for 1, 2, 3, 4 and 5 here perhaps for wave 3, which is wave 3 is longer than wave 1, and then wave 5 moving up through here, which this may not be finished just yet as well, for one more top there. That will just see how that goes at the 52 there. If the 52 becomes a resistance, then it will move back into this here. But it's only natural to expect some type of correction across the 5 here as such. So it's been positive earnings coming out from the finance sector in the US last night. This is the Dow Jones here on the daily chart, and as you know, we were looking for wave 4 to come into play, and that's coming in quite nicely, and the market has popped its head back up above the 13,500, which is significant. So we can also expect a correction to unfold through here as well, with eventual highs being made across here as well. But as I mentioned before, in this case, this is a new high here on this market, but 5 waves down here, 61.8 retracement level, and failing from that point, it's going to react up at supply levels anyway. So it's just really a matter of seeing how it settles back into the 13,500 as such, and what it does from that point there. This is just the 2-hour chart, and we've got this nice sort of impulse wave moving to the upside, but we should, once it meets supply up here, one way or another, it will come back and retest the 13.5 here. Once it's done that and created that pattern there, then if it finds support after that, then we've got the basis to have a long trade off that. So a combination of using Elliott for direction and the levels for the trade setup, in conjunction with the wave count is very helpful. Once again, that wave count that's moving up through there is, I won't go into it too much, but basically, as you know, we were counting the little 5 waves up through here, wave 2 back, and then it's moved up quite nicely. There's probably different ways to count this, but the 3rd wave being here, the 4th wave, and the 5th wave moving up through here as such. Getting to the top of sort of wave 1 with those 5 waves there. It's the same for the European markets as well. With the European markets, this is the DAX here. So with the DAX here, we're working from this high here, we knew that we had 5 waves down here. So if we get 5 waves in the opposite direction, that means we'll get another 5 after an ABC correction, which we got here. So we're tracking that down through to here. We know our numbers and so forth, so we're just watching the market bounce around. But what we should see here now is, and this will be the same for the Nasdaq had this pattern here as well. I wonder if I can find that Nasdaq here for a second. Okay, a bit here, there we go. So it had this, from this high that we've got in through here, we've had this little ABC for the B wave and the C wave coming down through here. So technically it should make a new high above here. Step by step though, all the numbers that lead into here. So what we want to see here is a nice 5 wave impulse wave structure up to the 28 here. The 27.72 is going to play a part in this, of course, as well. But eventually, once this becomes the support up here, then we can be assured that new highs will be made from there. So the DAX is much the same in its own little corrective pattern, but it's also moved further back up through here. And the FTSE is the same as well, slightly different sort of pattern. Just bear with me there for a moment. Staying with us here, we were talking about the other day, we're talking about the market working into the 5.8 here. So we had this range here, then we had a smaller range here, and then we had a smaller range in here, and we had this smaller range in through here, and we had this this move up through here, and then the retest here. So the bias was positive anyway, because it's just sticking to the 58, which makes it like that. It's like the Australian market sort of sticking to the 4,500. So if we look at, just bring up the XJO here, the cash market, sticking to the 4,500 here, just makes it, it's as you can see from yesterday, there was a new high made and so forth, and then it's sort of rejected as well. So what I find when a market is working across a level, if I can see that it's sticking to it, like the euro sticking to the 130, then I know that it's corrective and know that it's bullish. This has been rejected from here, but the SPY overnight was higher, so up here somewhere. So I know that it's generally sticking to this price here, even though that there's swings across it and corrective patterns across it because of large orders sitting at large numbers, so it's positive, but it's got more time to spend. Even if we do get a push, in 5 waves up through here, something like that, then we'll see a larger correction, come back into it as well. And the base metals, we've got our finance sector is positive, but our resources are still, just flat really, and slightly negative, as the base metals are sort of flat as well. But with the US dollar index pushing to the downside, then we're going to see more positive news come in for that as well. So This is what we're looking at through here, and we were also looking at this being an ABC here for wave 4, and then, as you know, we've labelled this up as wave 1 and wave 2 to come back here, and then we're looking for wave 3 to move up through there, and it is moving up, but it's not a strong wave 3 as such. It's because the finance and the resources are battling each other and really holding it to the 4,500. I mean, BHP and Rio can make up over, 50% of the index. So, there is that drag on there as such. But the little wave count that we've sort of had here is this up for 1 here, ABC back for 2 here, and then pushing higher from there. And it is pushing higher. It's doing all the right things. It's just not showing the personality of a third wave to the upside. It's more like a B wave, where we've got an A and a B and a C here, say for an A wave, then an A and a B and a C here for a larger B wave, and then a C wave down through here as wave 4, and then to the upside. It's just a little bit tricky. And look, and as I said, when we first arrived here, is that just expect corrective swings across this across this price here, and that's what's happening. But we knew that it would edge higher as such and stay reasonably buoyant within all of that. But it just can't really give a strong, clean direction on this market. And the Australian dollar is the same as well, because it's really influenced by, of course, China and the resources and whatnot. So anyway, let's have a look at those commodities. Okay, just starting with base metals here and looking at the US dollar. So this is the US dollar index here, and we'll talk about this more in the Forex section, but the main point here that we're looking at yesterday was that a breaking of the 92.72 here would create a bearish move for the dollar here, and strength for commodities and currencies and indices as such. So that's falling into line quite nicely. What we don't have here so far is we do this move down through here, as you can see, is in 3 waves. We'll be looking for that to develop further into 5 waves, which will confirm the lower price action of this low being taken out through here as such. So it is doing all the right things, though, in terms of moving back down and retesting the 80 and then breaking down through here as well. But it's also very much like this pattern here as well. So we need to be mindful of that as well. It's still in three waves here. With that in mind here, we're looking at copper here. So as long as copper keeps this low here, then we're pretty much on track with our wave count here in terms of this corrective pattern through here, which would be much the same as the Dow Jones and so forth. And this started before the Dow Jones, because this is the Dow Jones started on the 21st here, and you can see this one here started it much earlier through here. So sort of in line with gold in its own way. So we need that 372 there as support. This move up here does concern me, though, because it's not really in a nice little impulse wave. So when we have a drill in there and have a little closer look at that, you can see that this move here is in 3 waves here. So that's a corrective wave in 3 waves here. So we just need to be mindful about that. That can certainly fail from this point here and move further down. And then we'd need to look at this in more of in a different type of correction, more of a triangle correction moving across this level through here. So that's going to be an important part. So if the 372 finds support here, then we can consider the base metals and resources positive at that stage. So let's just see how we go with that. We've got some CPI figures coming out of China tomorrow, so that will be the main sort of focus there, as in concern with the Australian dollar and base metals. The oil market is looking a little bit chirpy as well, which is good. So as you know, we were looking at this move down through here as the A wave, the B wave, and the C wave. This here can be counted in both ways. It can be counted as an A and a B and a C correction through here as a corrective pattern. and this here is also, that's bullish correction here as well. So this three-wave structure here should create new highs above here. So it does make it a positive structure in terms that we can call this up for wave 1 and back for wave 2, and then we can call this one on a smaller wave 1 to the upside in 5 waves to the upside, and then an A and a B and a C correction coming back. And then we can look at this being 5 waves up through here as well. So it's all starting to pan out quite positive here. So a good support, retested support, is just poking its head up through here at the moment through 92. But if it moves up through there and comes back and sits on it as support, then you know that you're on the right track from there. So just drilling into that a little bit further through here, this was the, you know, we need to keep these two counts here, the 1 or the A, the 2 or the B, and the C, and so forth here, until this pans out. But this move down through here, being an ABC correction, and then we've got 5 waves up through here to make wave 1 and a wave 2, either back to here or back into the 91 here, which would be the 61.8 retracement level as well. But it is looking quite chirpy and following stock to the upside, so this really creates a long trade at this stage here, with stops under the 91, and then if 93 becomes a support, you can add on to that as well. The gold market, a little bit trickier. This move that we're looking for down through here, we can see that it's still got more to unfold to the downside, in terms of a wave 4 to here and a wave 5 to here to complete this structure here. That's the way we've got it counted at the moment, with down for 1 and back for 2, and then down for 1 and back for 2 here of a smaller degree, and down for 1 and back for 2 here, 3, 4 and 5 here to make 3, to make 4. So 1, 2, 3, 4 and 5 for it to complete down through here. But I guess that it could also be counted in a zigzag as well, if the 1750 is going to find support. So this is the closest largest number here, the 1750. So if that develops as support, then would have a long trade from that way, and that low would be in place then, and it would have to be counted in a triangle pattern, which you can see on the Elliott wave charts in that case. So look, it's really all about the 1750. So just keep an eye on that, and that would be the same for silver as well. If we can just drill into silver a bit more closely here, just bear with me here. So with silver as well, we've been looking for a 5-wave structure to the downside. We've been looking at it in terms of an A wave, a B wave, and a C wave to the downside. And C wave was the wave 1, the wave 2, the wave 3, the wave 4, and we're looking at the wave 5 coming down through here. I just thought there was one more little push into here, but we'll just see how that goes. So if the 33 becomes the support there, then we can call this completed here in terms of this 5th wave here, and that would be counted the 1, the 2, the 3, the 4 and the 5 to here, and done and dusted, and just look for support on the 33 and go long from that point there. But I just thought that there was this was from that little high there, that was down for 1 and back for 2 here, and the 3, 4, 5. So this is just a 3rd wave and a 4th wave here and a 5th wave to go. So anyway, it doesn't, not that it really matters a lot at this stage. Let's just see if the 33 becomes support. So you would need that anyway. So we're not missing anything there as such. Alrighty, well look, that's it. Oh no, we've got to do the Forex yet. Sorry, I had a late night last night. Let's check that out. Okay, the US dollar index here, and as you know, we've been looking at this as a wave 4 here, and wave 4s can always be complicated and yeah, just a little bit sort of just a bit hard to read, a bit sideways and so forth. But we know that it's corrective, because we know this pattern up through here is a corrective pattern because of its overlapping wave structures. So we know that it's corrective. It's just when is it going to be finished is the question. But we do feel that now that it's got this three wave pattern here, that it could certainly be finished at this point, but it's not done and dusted just yet, because we need to see a bit more of a 5-wave price action down through here. So this trend line here, for instance, will give it some support at the moment through here. So just be aware of that. But we know that it's corrective. It's just a matter of it finishing, and we think that it's finished now. So just drilling into that somewhat now is that on the way down here, we're looking at this being down for wave 1 here, back for wave 2, retesting the 80 here and fading at that point, and then moving down for wave 3 here, wave 4 and wave 5 to move further down. So obviously this is going to be pushing the euro up and also helping other markets as well. So just drilling into that a little bit more through here, just to give you an idea of what we're sort of tracking here. Is the little 5, this is just the third wave, so we've got wave 2 here, so this is just wave 1 here, wave 2, and then wave 1 and wave 2, and then this is all the third wave coming down through here, so 1, 2, 3, 4, and 5 to here, with 5 waves in the 5th wave through here as well for the 3rd wave, the 4th wave back. Now the 4th wave can get complicated as well in terms of a triangle, like an A, B, C, D and E, and then drop from that point, or it could be really simple like this through here. But because wave 1, 2 was all wave 2s here was simple, then we have to expect this to be complicated across here. So the 79.50 is the midpoint, so it will play out across there. But we're looking for wave 4, wave 5 to make wave 3, and then wave 4, and then wave 5, which then will just make the wave 3 wave here. So still expect it to edge down. We know there's trend line support through here, as we just pointed out before, but it's more confirmed now that we're on the right track, and the trigger was the 79.72 here being breached, and yeah, so that's all going on track. So the flip side to this is of course the euro here. So in the bigger picture here, if we can find it. No, I might as well just have a look at this for a second, because this is the weekly chart here, and we're looking at this being a wave 3 and wave 4 here, and then up for wave 5 here, and that wave 5 would take us to the top of this whole move up through here, and then we'll see an A and a B and a C move back into the 130 again, and because we're looking at the classic trading levels pattern across the 130 here, but we should be looking at 5 waves to the upside, making a new high above here if we're on track. As such, so with that in mind here, this is what we're looking for here. Right, so yes, wave 3 and ABC for wave 4 here, and then we're looking for wave 5 to come up to make that A wave as such here. This can still also be a triangle here, but once it takes out that high there, then that won't be the case. So that high at 130.70 there, so you might as well look to 72 there. So that taking out that high there will make us we'll have that correction finish as an A and a B and a C, and we can move higher from that point. So just drilling into that move up at the moment, then we will be looking at it something like this here. So this is our A, B and C correction here for wave 4, and as you know, the other day we were looking for 5 waves up here, which we got, and if we get 5 waves here, that means we'll get another 5 waves over here. So we do need to take out that top there at the 130.72 there, which should be the case, because this move up here is starting nicely. So we've got up for 1 and back for 2, and a little third wave moving up through here, which has got further to go through here as well. If I got that further down here, I haven't done the work on this one just yet, so just quickly have a look at that. Yeah, look, anyway, support on this is correcting here, which can be an A and a B and a C coming back through here. So it's the same story when using the level. If you get support on the 50, then you go along from that point. If it comes back down here, yes, it will bounce off the 30 here and probably come back and retest the 40. But what you want to see it do is actually move down, just like here, actually move down through here and then come back up and find support on it and test it, and then you trade it up to the 50 again. Do you know what I mean? So that's what you want to see here. So if it's coming down here, sure, you can work the 40 and the 30 to the downside, but the long trades need to see it come spike down below the 30 and then find support back up there. If it even comes down further into the 20 here, spikes down to the 20, then comes back up on the 20, then you can trade it long from that point there. So you need it to spike lower and then find support. That's what you're looking for, because you need it to test. It's all about the testing. The Australian market has two wave counts, two possibilities. But in terms of trading situation, it's going to be quite soft like metals are at the moment. So there is the possibility of moving up. However, we do need a support base to work that off. And yes, we do have the 102 there, and we know that. But we really need that 102.72 there to become that support there. And you can see that it is holding on to it, and it's getting there with it. So if you do see that today or tomorrow, whenever, then you can get a position long off that, and then look for support on the 103 here, and that means that this would follow the S&P 500 to the upside, but you do need to have that price point to work from. So just be aware of that. There would be better trades out there besides the Australian dollar at the moment, or in fact the base metals and so forth. So we just need to see a little confirmation in the resources, and that may come from the CPI, PPI figures coming out of China tomorrow. Of course, it's really all about the leadership transition from China in the new year, with new plans, foundations for whatever they decide to do, which is always a bit of a guessing game. If they go internally into roads and health and so forth, or larger infrastructure projects, and they'll have a bearing on what happens to the Australian dollar in that particular case. So but in the meantime, we just trade what we see and what we know, and what we do know is that we do need that 102.72 as a tested support there before long trades can go in there. Alrighty, just to recap a little bit, the US markets are up, but they're the catalyst for being up is the finance sector. So that's what we're trying to do yesterday as well. We're trying to stay away from the resources yesterday, and looking at the QBE and the banks a bit more and so forth. So that's sort of in that sort of away from the resource sectors, and it's just still continue to do that until we can see some strength, either support in the Australian dollar, or copper being above 372. Alrighty, well, good morning and good luck.